Good morning. We're getting into mid-July, and basically it was the best of times and it was the worst of times this past week. The worst of times for grain producers because corn was down 25 cents, November soybeans down 42, September Chicago wheat for the week down 12 cents, and Minneapolis down 34. A terrible week in the grain market, but the crop continues to improve in the field, especially on the corn and soybean side. On the outside markets, crude oil was higher, gold was higher, and the US dollar was higher. This hurt the grains a bit, but normally grains follow these outside markets, but it didn't. We've got a lot of trade things happening, though, as well, and I think that more tariffs being placed more permanently on countries is hurting the grains. But look at the opposite side, the best of times. On the livestock side, October live cattle, new all-time 6,000 year highs, up $8.80 for the week. Feeder cattle, even better, up $15.88 for the week. What a strong performance. And here's the problem on the grain side, as well as the trade problems. Corn conditions improved 1%. Our yield model now is 190 bushel. Wow, that's 10 bushels better than last year's record yield. Trend is 183.7, so we're well above that. 181 is still the USDA report. In fact, the joke of a USDA July report left it there at 181, even though private estimates like ours are at 190. And it's grown over 5 bushel the last 2 weeks. So 200 bushel corn is a possibility in 25 if we continue to improve at the pace we have. Soybeans unchanged, 66% good, excellent on Monday. The yield model, though, jumped 0.29 to 52.47. That's just about at USDA's number, which is above trend, but we have a pretty good crop growing in the field and getting better every week. Spring wheat at 50% good, excellent, going the opposite way. There are dry areas in the northern part of North Dakota, for example. It's dry in many areas. Down 3% for the week, and that's well below last year's 75% rating. So spring wheat could be a poor crop this year. Winter wheat ratings, the final one of the year, 48% good, excellent. 53% of the crop is harvested, now only 1% behind normal, but we've got some quality problems there. Our final yield estimate, 52.9, was up a bit from last week, a little above a bushel or so above trend, but USDA is at 54.2. They raised the yield a half a bushel, but they lowered the harvested area so that the actual net production was smaller than June. What a crazy USDA report. Topsoil moisture is still pretty high, 74%, only 3% down from the week before and only 1% below last year at this time. Subsoil 74, up 1%. And so we just still have very good soil moisture conditions. USDA July report came out Thursday, and what a joke that was. Nobody paid any attention to it because they left the corn yield unchanged at 181. Most traders probably just stopped looking because it became irrelevant. They didn't change it, and the corn crop has improved significantly the last few weeks. Now, actually, in defense of USDA, they usually don't do much in the July report, and then they hammer us in the August, September, October report. Soybeans were unchanged at 52.5. Actually, that's already a high estimate anyway, but this crop is improving. Corn is way low, and so I think people pretty much stopped looking at the numbers. If you look closely, they have smaller production numbers for corn and wheat because they cut the harvested acreage. And, you know, the June 30th numbers were updated too. That was 100,000 less planted corn acres than they thought. But they cut the harvested acres, I think it was 600,000. They cut the soy and the wheat harvested acres. That made things look a little better, but that became even more of a joke because the corn yield is way too low. They did end up with smaller world corn and wheat stocks and just slightly higher soybeans. Actually, that report would have been bullish if anybody believed anything, but once they had the corn at 181, nobody believed a thing more in that report. Winter wheat yield was 54.2. They're above our yield estimate, but they cut the harvested acreage. They actually raised the all wheat yield a bushel here, but they cut the harvested acreage so much there was a smaller production number. You know, I don't know. Winter wheat did have trouble harvesting it, so maybe that's what they're thinking. Market is way ahead of USDA because the market is trading 190 bushel corn. And when you look at the corn prices, I mean, we dropped significantly. They thought that they would announce a trade deal with China over the 4th of July holiday in Des Moines. President Trump was there, but he didn't. And bam, we took it down on Monday. And then we got that yield update with crop conditions improving 3%. So corn is running to new lows for the year. And it should, because 190 bushel corn and growing each week is certainly worth lower prices. Soybeans also dropped to a new recent low, but you can see the fundamentals of soybeans are different because we shifted 4 million acres of soybeans to corn. So we probably will come down and test these lows in corn. I'm thinking, if you look back, 390 corn is an attraction. So I'm thinking we'll probably test the 390 level. What do you do in corn? We're already into farm safety net price levels. If you have ECO 95, which was increased in subsidy, you essentially have a 450 put option. You know, we averaged in February 470 for corn on our average. And you bought 95% protection, you have 450 protection. And actually, we're well below this. So really, if you are selling, if you're going to make sales here in grains, you're actually speculating because your risk is already covered, especially if you have ECO. And actually, even if you don't have it, now we're getting so low, 412, you know, you're probably into the area where there is price protection with your ARC or PLC, which is enhanced this year with that big, beautiful bill. There were a lot of things. A farm program basically was in that big, beautiful bill as well. A disaster program, I think $16 billion for 2023 and 24 disaster program. So farmers are going to get a lot more money from the government on that. But really, if you want to, you can you could actually sell corn here. And with an objective of 390, I think that's a great spec trade. And for farmers, essentially, if you're selling here, that is a spec trade because you have protection in place. But, you know, maybe you could call it a hedge. Technically it is, but you have a farm safety net that's already in place. So it's going to be very hard for us to recommend sales here on a spec side because corn yields continue to improve. As long as that corn continues to improve, and it could improve the next 4 to 8 weeks all the way into September if the weather is good. And from that standpoint, markets should continue lower. Unless we make some big trade deals, just the rumor of a trade deal over the 4th of July caused corn prices to jump 20 cents and soybeans, I think, about 40. So here we are. There's our trade rumor in soybeans, bounced higher. Soybeans are running lower. Soybeans, from a standpoint of the markets, a spec trade, you know, basically you would short the soybean market with an expectation you'll drop here to this 980 or even the 960 mark. So, and here is the problem. The crop has been improving rapidly the last 3 weeks, and you've got a wet and relatively warm forecast for the 8 to 14 day. That's the 2-week forecast. The next week is supposed to be about normal precip, and maybe normal or a little above normal temperatures is actually pretty good growing conditions. If that continues for 8 more weeks, we could go down until we announce some big trade deals. And at this point, we haven't had them. I do think the market will bottom here as soon as the crop stops making significant improvements, and then we start announcing trade deals. But for the time being, the trend is down, and the trend is your friend. You have to trade that. Wheat markets testing support again here. I would guess that if corn and soybeans continue to make improvements in yield potential, wheat might come down and test this 520 level, at which maybe you might want to take a stab at the long side of the wheat market. Here's the spring wheat market. Pretty significant drop this week again. And spring wheat might, even though spring wheat ratings are horrible, spring wheat might come down and test these lows with sympathy from the corn and soybeans, which are improving significantly. And also, you know, you have spring wheat harvest coming. Looking at some of these outside markets, you can see we have a nice uptrend in crude oil, And we had that 12-day war between Iraq and Israel. We spiked higher, but actually we're holding that uptrend with this spike in between. So crude oil is still trending higher, and higher this week as well. The gold market is stalled out for time being, but still holding these support levels. Look, gold looks like it's going to go back up here and test this high at 3,500. I still think gold is probably going to run to 4,200, which is a doubling of its old previous high by the time we are done this year. And here's those bright markets. It's the best of times, it's the worst of times. You get to the dollar index, which was a little higher this week, but the dollar is weak, and that could support the markets as we go forward in 2025, especially the grain markets, especially if we make some trade deals. But here's the best of times. This livestock market, live cattle basically running to new all-time 6,000-year highs. And the same thing on the feeder cattle, just a huge gain this past week. Of course, exporting meat into the United States is not going to be easy for Mexico or Canada, and so that is causing the live markets to go higher. So cattle markets red hot right now, and grain markets cold, 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 because the crop continues to improve in corn and soybean country. I'm not sure, as a market analyst, risk management specialist in agriculture, I can't recommend grain producers make sales here because it's so low, but you're going to have a long wait before prices improve. And if you want to have a position right now in the market, certainly the short side, as long as this crop continues to make improvements and no trade deals are made, then obviously the short side is working. And 190 bushel corn crop and growing, that is a big negative over the market. So as long as that crop condition rating and yield potential continues to improve in corn, it's not a good outlook right now for the grains. How long can that continue? Well, the crop really actively growing in maybe another 8 weeks maximum. By September 1, that corn yield model won't change much, but when it's making these leaps forward and that yield potential is going higher, we're going to take prices lower. Hope you have a great weekend and good marketing.